And now for something completely different.
It's a rich man's world.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show, presented by RIA Advisors.
And welcome to the Friday edition of The Real Investment Show. Hope you all had a wonderful week and looking forward to the weekend. I'm Rich Rosso, certified financial planner, here with Financial Planner Squared, Danny Ratliff. And we have, let's see what we look at here for the market today. It's been a pretty mixed picture. We hit that high on the S&P 500 on a sort of on a daily chart basis. We're sitting right on a support level for the S&P. And, there's been this rotation, right, Danny? I think it's going from the sheltered at home trade to somewhat of a life is going back to normal trade when you see money moving out of tech. We had taken some profits in tech a while back. We added a little back in. So I think some of the story of sheltering at home and the whole COVID thing, and I don't know why, I guess people are just sort of done with it. The normalization trade is going to have some rotation that goes into the areas of industrials and sort of the out of favor areas. We had added to some of the industrial space not too long ago. So we are sitting with a Dow that's pretty flat. It'll be interesting to see what the NASDAQ does today overall. That's obviously where the money has been coming from. Again, I mean, it looks more like some of the edge is being taken off. Some of the heat's coming off of that. No big deal. 10-year Treasury at 0.672. Since Powell made his statement, which is obviously, I was telling Lance yesterday, when Greenspan would come out with a statement, I needed a week to break it apart and understand it. When Powell says something, it takes me about 3 minutes. I mean, he's pretty transparent, right? We're not going to raise rates for years. Now, again, we've been saying this for a very long time, and Lance before this, that rates weren't going anywhere. But Powell is pretty clear. But what this market wants, and again, it's like a child banging on the floor, we want more stimulus. For what, we don't know. But it wants more stimulus. And I can see, we talked about this, Danny, I think the market's more concerned about the state of the recovery or some of the wind behind it starting to dissipate. What do you think?
Well, I think that's going to be the important thing moving forward on what does this actually look like? How many people actually get back to work? Mm-hmm. What does this new normal, I hate using that word, but what does it actually look like? Because this is what's going to be important. And so the market has ran so far out in front of the economy that it's sitting here waiting for it to catch back up.
Yep.
And how long will it sit before it says, okay, hey, I'm going to come back and get it? It could be, they may not wait as nearly as long as what somebody would suspect if we don't get much better numbers, which is why I believe that they're thinking stimulus is something that's it's needed. We're at that stage in the market or the economy here where we're going to have to see some additional measures to see this thing continue to roll.
I think if the fiscal stimulus package was on the table, we would see this market do a bit better. Again, I think it's going to take proof, and we've discussed this, to bust through to new highs, go through the previous high and remain there as support. And we're just not getting it. And now we're going to be into retail season, right? Selling season. What is that going to look like? So again, the upside could be a bit at risk. The market wants more quantitative easing, and they're really not getting it. But again, we have got a Fed that obviously is very, very accommodative.
Well, they're
going to get the least.
They're going to get the words and the verbiage around it, because we know both sides are going to bring something to the table so that they can point the finger at each other and say, "Well, see, we could get this done," but that's what's sad right now, because there are people that are hurting. We need these measures.
It is ridiculous. Okay, to your point, there are people who are suffering. And we're going to play political games on the fiscal stimulus side. I don't understand it. I mean, I don't really understand politics. That's Chris Salcedo. He does a great job at that. But to play with people's lives who need the money to me, is something can at least partially get done. Get something out there. At least like say, okay, let's break this apart. What's the big deal? Let's at least get the relief that needs to be done. I mean, I don't know, but the market expects it. The market's disappointed by not having it. Now, who knows? Nobody knows if the market's going to correct dramatically here. But again, you have the Fed as a backstop. You have been most likely are going to trade in a range until the market gets a clearer picture. And what we expect is more volatility to come. So I've added some interesting charts, Danny, thanks to Lance, to our retirement right lane. This is our pre-election edition. Policies, not politics. So this is really the comparison of platforms to some degree and their effects on investors and retirees. This is a go-to webinar. We're going to have it on Saturday, October 3rd. Now, I'll tell you, this is the long one, right? This is not Candid Coffee. This is 2 hours, 9 a.m. to 11 a.m., soup to nuts, everything you need to know if you are looking to retire, say you're 3 to 5 years from retirement. Because the one thing, Danny, I know you and I are concerned about is retirees today are going to be in a headwind for portfolio returns. And how do they generate the paycheck they need to survive in retirement? It's with bonds where yields are, stocks overvalued. It really is a treacherous time overall. And if you're not doing the right things with Social Security, and we watch Social Security, we're going to talk a little bit about that today very carefully. If you're not doing the right thing with a pension, if you are fortunate enough to have a pension, or if you're not even looking to maybe redesign a pension if required, you're going to be in big trouble. And what I mean by big trouble is you're going to have to adjust your lifestyle. You may have to make some big, big changes that you may not be up for. We're going to talk a little bit about an article that 75% of households could face a big retirement shock. And frankly, we've been talking about it for a long time, but this fallout of the pandemic is going to affect retirement savings for who knows how many decades. We get back, I want to talk a little about financial advice. What does it mean to most people? And what is it really? Or what it should be. Here on the Real Investment Show on 700 KACV, the voice of Texas. We'll be right back.
Got questions for Lance later? Ask now at realinvestmentadvice.com.
Modern day warrior, mean stride. Today's Tom Sawyer, mean pride.
And welcome back. Whew. Financial Fitness Friday. So I was out looking at houses yesterday. Well, day before yesterday, I think.
You leaving the hood?
No, I don't know. I'm just looking in Danny's neighborhood so I can terrorize him.
Come on. Don't be shocked when you start getting calls to babysit.
Yeah. Oh, I'd be great at babysitting. I got the dogs to wrangle everybody together.
Uncle Richie. Yeah.
So the thing is, nice gentleman who is Realtor, always interested in people's stories. I mean, part of, I think, why we're advisors, Danny, is aren't you captivated by how people, their whole stories, how they learned about money, who influenced them, businesses, families. I don't know. We live vicariously through our clients. I don't think it's a bad thing. I enjoy it. I've always have. I sort of miss some of that with this pandemic. I've actually, even though it's Zoom, but actually meeting with people in the office and
you miss the face-to-face.
Yeah, you do miss. It's different. It's opposed to just having that face-to-face on a screen. And this gentleman, I gave him credit. Starts this real estate, his own real estate. He's sole proprietor. Worked for the railroad for many years and has pension, which is incredible, right?
Yeah.
Railroads have some of the best pensions ever, and some of the best benefits I've seen next to oil and gas companies. And He goes, I just don't, my tax person doesn't really give me any advice. And I started thinking about it. So the one thing I did was I said right away, I can give him great advice because we talked about he's a young guy. Obviously, his health insurance is not Medicare, right? He's got to have a high deductible plan, which he did, right?
Good.
Right away, we talked about the health savings account, right? Also, because he had the pension, I figured, you know what? Here's the sole proprietor, a SEP IRA. So I was just talking about the positioning of those couple of things. And I said, hey, let me know how it goes. So he texted me yesterday. He goes, Rich, it was great. I already set up my HSA.
Awesome.
And so I started to think about when most people hear advice, financial advice, or when I see it advertised on CNBC, Fidelity has an ad right now. It goes, Fidelity Wealth Management, right? Which should be a huge umbrella that covers so many things like we do, Danny, right? The holistic. It's always about the portfolio. Financial advice is always about what stocks do I buy. It's always about this one layer of a 7-layer cake when all the other layers, in other words, if I would have said to this great guy, this stock, this is the hottest stock ever, as opposed to saying, set up your health savings account, don't touch it, because he had one and he spent it down. And I said, no, this is how you handle. What's the most valuable advice you are going to get from a financial partner? Yeah, I'm not saying the portfolio isn't important, but we have all been trained, and I watch financial ads on CNBC very carefully. Wealth management equates right to the portfolio. That is it. Nothing about Social Security, nothing about Medicare, nothing about efficient tax strategies, nothing about managing risk. Always about portfolio.
Well, because that's what sells. I mean, how do these guys? These guys don't make money off any of those other things you just mentioned. That's the biggest problem. Unfortunately, we don't take the holistic view when we talk about these things many times. I'm not saying we, but I'm saying in general the financial world, because the financial world is designed in so many ways to push a product. Just like you mentioned, I mean, we have 3 TVs up here, and I guarantee if there's a commercial on, more than likely it's going to be pushing an ETF, a mutual fund, some type of money management.
Oh yeah, we got all this. We got all this kinds of Snowflake. We got all kinds of great products now. Wall Street's coming out with.
But that's
just to get your money.
What's sexy. It's exciting because we think, wow, you get the visions of, these of grandeur in your head because you think that, wow, this is going to be great. We're going to make so much money on this stock. But wait a minute, is that really how this works? How many people have you actually met from that E-Trade commercial? Do you have anybody from high school who's sitting on a yacht because of that, who's flying their private jet? Absolutely not. I don't know one person who's a day trader who's doing that. Now, not to say those guys aren't out there, but they're very few and far between. But it's the sexy thing. It's the easy thing to sell. It's the things that people want. The issue is, and I'm shocked that the person, your real estate agent you spoke with, said, yeah, you know what? I went ahead and did this. That's awesome, because that's the stuff that people typically drag their feet on.
No, and because he was very excited about it. And I said, this is the beauty of helping somebody with financial advice.
Yeah.
The structure, the ideas versus, you should have this much in this stock, this much in that stock. Or we went right to, hey, you're a businessman, right? You're a sole proprietor. How do we save you taxes? You've got a lot of write-offs, but I knew right away we talked about the retirement plan, but he had no idea about maybe looking at the health savings account. That's the first thing he set up. But when you can provide information like that, as opposed to saying, oh, yeah, buy tech stocks, go to Robinhood and, do this, instead of that kind of talk, we need to re-educate consumers about what's very important, the habits, the foundation. Here's a gentleman who worked for the railroad but decided instead of he had this very comfortable job, he's going to go out and be an entrepreneur because he's always loved real estate. And I give him credit for that. So he works with a tax person. Why isn't his tax person talking about a SEP? Why isn't his tax person talking about a health savings account?
Right. I mean, look, so unfortunately, talking about tax, there's a lot of very good CPAs out there.
Absolutely.
But to find one that's going to be forward-looking is sometimes difficult because, and I'm not digging on CPAs here because, like I said, there's a lot of good ones. But
there are a lot of good advisors.
But there are a lot of them that they're filling in the blank. And so that's what's unfortunate. The other aspect of this is from a CPA or a tax perspective is that these guys are designed. We grade CPAs, and this is where CPAs get a really bad rap, I think, in regards to forward thinking or forward thought, is that we grade them and judge them on how much money they save me today.
That's right.
When we need to be thinking about the long term, the big picture, especially in the environment that we're in. Mm-hmm. And so, I know how many people do you know, Rich, that have fired their CPA because they didn't save me enough money, even though if they did a good job. But they did a good job for this year.
But to your point, today.
Yeah, we need to be looking further. But I love what you're saying, though, because that's showing that somebody's saying, okay, you know what? These small moves. So that's one big piece or one small piece of a bigger puzzle. And I think this is extremely important to think about, that so many times we want the market to do the heavy lifting. But this guy's setting something up for his future. He's utilizing a small piece, saying, okay, we can use the HSA. Wait a second, I can do a SEP. And there's so many things that he can add on to this that are going to fill in these pieces of this puzzle that are going to end up working in unison over time, that are giving him that flexibility, give him security, give him options on where to pull funds from. So many times we skip to, okay, you have money, how do you distribute it? But how many people are actually taught where to put these funds aside? And I think that's the important
It is. The vehicle, the types of vehicles you use.
Correct.
I mean, everybody always worries about the passengers in the vehicles, but, I've got to have this in international, this and whatever, because my advisor tells me this. And plus, I'm always looking for these kinds of returns or whatever it is. It's such a myopic way of looking at your money. It's like taking a dollar bill and cutting it in 50 pieces and looking at one piece of it. It doesn't make sense. But this is how the industry is trained. And candidly, Danny, this is how we were trained when we first started.
Yeah.
Right? About the portfolio and modern portfolio theory, which doesn't really work, and other things, okay? That, it's important, but it's not everything. It's a piece of the overall financial puzzle that makes up you and your life and your family's lives. And I think that's why when you have this holistic approach, like what we talk about in the Right Lane class, and we go over all these elements, but even as we help people today to create the structures that they need, the investment part to me is like the icing on the cake. That's the fun stuff, right? I mean, I could do this kind of stuff with my eyes closed. The challenging stuff is, how do you create this tax-efficient retirement income withdrawal over time? I ran an analysis yesterday for a client that if we do Roth conversions over the next 10 years, if I'm correct about taxes, and what I mean by that is the current tax code first, just the Tax Cuts and Jobs Act sunsetting. But I also did some analysis just saying, hey, what if Biden's tax plan comes into play?
Yeah.
Right? I said, I'm going to just assume that this plan comes into play, and I manipulated the system to see. If we do this efficiently, take money from IRAs first, do surgical Roth conversions, with Biden's plan, we were going to save $550,000 over his lifetime. If just with the current plan, it was $342,000. So the thing is, that is a long-term life plan of managing taxes over time. It's not like, how much in taxes did I save today? If anything, his tax rate's going to go up for a bit because we would front load these Roth conversions. But over the lifetime of these distributions, his Medicare premiums smooth out, right? Unfortunately, a lot of times we all cannot ignore or avoid taxes on Social Security. The thresholds are so low. But we can work on the Medicare side of things. So when you consider financial advice, and this is a good little bit of a homework step for everybody, when you all consider what it is, try to do it without taking the portfolio out of it. Don't think of the portfolio. Take it out. What does financial advice mean to you and your family? And if you take the portfolio out of it, you might be surprised what you start thinking about. Mitigation of risk, life insurance, tax-efficient strategies. Your mind will, poof, you're out of the matrix, buddy. You're out of the matrix. You're Neo. That's what a good financial partner will help you to do. Think bigger. Hey, we get back. We got obviously a few other things about this households and the big retirement shock that could be coming on 700 KACV, the voice of Texas.
Catch the best of The Real Investment Show anytime, anywhere from Stitcher Smart Radio. Download podcasts of The Real Investment Show from Stitcher.com.
Welcome back to The Real Investment Show. This is a Financial Fitness Friday edition. I'm Danny Ratliff here with Richard Rosso. Hope you guys are off to an excellent start to your weekend. So we talk a lot about the risk and things that have changed during the pandemic, but I think it's still yet to be seen the overall effect of what has happened. But you know, looking back, we spend a lot of time looking at research, and there was a study in 2018 by the Center for Retirement Research at Boston College that states half of all U.S. working households are at risk of being unable to maintain their standard of living and lifestyle in retirement. Now, this was back in 2018. This was pre-retirement.
Lance, right? As we've all been writing about, right? How people are just going to be in trouble. This pandemic just rips it apart.
It does. And so we talk about the stimulus. We talk about the things that are just keeping people solvent. But this is keeping people solvent. This is not helping them get ahead. They're not getting any further. And so this could exacerbate this problem to make this much worse. And so as we kind of peel the layers of the onion back and start to see, you know, is it still fresh or is something gone bad here? I think we're going to find that there may be some rotten fruit out.
My goodness. You know, you've lost some of the major pillars, or the major pillar that held up retirement, and that's pension, a guaranteed lifetime income that you can't tap. You see, 401ks and IRAs have what we call leakage. You can tap them to buy a house. You can tap them if you need to breathe. You can tap them now through the pandemic, which I don't think is a bad thing because people need to pay their rent. And there are a lot of people that are still tapping their retirement accounts to make ends meet, even though they have the opportunity to possibly put the money back. The numbers are dismal regarding at least the first analysis of how many people will actually do that. I think it's even lower than the 1 or 2% they're saying will do it. So you're going to be where over half of U.S. working households will not be able to maintain their standard of living. And again, to Danny's point, that's 2018. Now we're down to probably maybe that 25%. Unless there's a course correct. We talk about course correct all the time. And that, again, is not basing it on the market is going to carry me. The market is going to provide me the return I need to overcome the mishaps for bad financial habits I have. Of course, nobody who listens to this show.
No, Rich.
So we talk, right, Danny? Tough decisions that many households are going to need to make. And you know what? I have watched through this pandemic households finally realizing that, you know, the mainstream media keeps telling me that these crises can occur over maybe 100 years, 1,000 years. No, every 10 years. And I only need one financial crisis to knock me down. I have just had 2. Which means that as a household, how do you recover? Listen, a corporation can recover quickly, right? They let people go, people get paid. I mean, they are nimble. How does a household replenish this? So working longer,
Spending less.
Much spending less. How many, you talked about the Pew Research study about how many people of family are now living together under one roof.
Man.
It is the highest level it's ever been, even since World War II. I mean, it's the highest as far as children living with their parents. So how are baby boomers finding themselves in preparation for retirement? Now, part of it is, and we are watching Social Security carefully, and we've talked about, we don't worry that Social Security is at risk. It's still one of the best guaranteed income programs that you have, and you still need to take the emotion out of it. But without some form of supplementation to Social Security, and I'm not talking about variable assets like stocks and bonds. I am talking about guaranteed pension options. With the way people are living longer, Danny, I don't know. I don't know how you do it without a pension now, or at least some form of guaranteed income structure in your portfolio.
Well, you're right, and this is why we drive these points home on the things that you can control. So you used to have that three-legged stool, Rich, and it used to be personal savings, retirement accounts. You had your pension from work, and you had Social Security.
Yeah,
but the unfortunate thing is we can only control one of those things, and so we can control what we're saving, where we're putting funds. We can't control if we don't have an employer pension plan, which most don't any longer. We can't control Social Security. Now, we can't control the behaviors we make around that. Like you just mentioned, we think it's going to be there, but especially if you're younger, it's probably going to look much different than what it does today. And, we knew we had an issue there from a funding perspective. It's just been sped up because of the pandemic and all the people who've been unemployed. Now, not to mention if you do have a true payroll tax, we have a holiday now, but if that goes away, I mean, how's this going to be funded?
Well, that's why another reason we've been saying, Danny, that taxes are going to go up is that one of those taxes that are going to have to go up, whether it's Democrat or Republican, payroll taxes, at least the lid on income subject to payroll taxes is going to be lifted for Social Security.
And that's an easy thing to do, right? And I think that younger generations are likely going to have it, instead of being 67 full retirement age, it'll be 68. But the real point here is that three-legged stool is gone. Now you're trying to sit on one leg here, and that ain't going to work. It's going to be pretty wobbly trying to balance yourself.
The wood you're using for that leg's not very good either, because first of all, the consistency of saving is not there, right?
Yeah.
Right. So I don't even know if I'm building out this leg properly. I can take money from it really anytime I want.
You've got a cardboard leg?
Yeah. You sort of do.
Yeah.
I mean, think about it. I mean, it's a house of cards.
Yeah.
You're basing a guaranteed income stream, fixed income stream, on the assets that go up and down. We already talked about some of the best academics saying, well, the 4% portfolio withdrawal rule is really about 2.4%. Surprise.
Yeah, but that drives people nuts. Nobody wants to hear that. Nobody. I mean, you and I talk about this at our Candid coffee, and people are like, whoa, wait a second. That can't be right. Well, if you're going to have lower for longer, that's probably going to be right. You have to remember, those rules are 20, 30, 40 years old. And, we had rates that were much, much higher back then.
If your advisor right now in financial planning software isn't updating future returns for stocks and bonds to be much lower and promising you 6 to 8, 9% returns on your money, you better get a second opinion from someone who is looking at valuations and looking at long-term trends of interest rates like what we do here.
But you mentioned something earlier that was interesting in the sense that
the cardboard stool, the cardboard leg.
No, but what I think that people need to keep in mind is that you're right. You have markets at highs. You have rates at not all-time lows, but darn near close. So
and people say, well, rates can only go up. No, they don't have to.
And the market can only go up because the Fed's still there. But as we're seeing here this week, that maybe the market's not buying the Fed anymore. Maybe, this big inflation run they keep promising isn't going to happen, which is something we've been saying. I mean, they've been trying to get to 2 forever. So just for them to change their verbiage from 2 to, hey, we're going to let inflation run to 3 to 4, that's a little bit, I'm not sure that's going to happen. But where we are today, is certainly something that you need to keep in mind when you're looking at the overall broad big picture, which is why we always mention, and what we talked about today was making sure you're making the good decisions along the way on where you put funds, how you save, how you spend. That's a big part of it.
Yeah, and you have to keep this in mind. With valuations the way they are at roughly 32 times earnings, from year to year, it doesn't matter. Over 10-year periods, valuations, recent studies show, still matter. They eventually do. That doesn't mean you have to fall off a cliff when it comes to returns. That means you can have stagnant returns. Think about having a big meal at Thanksgiving, and you sit in that chair, and you have to digest that meal. Sluggish until you work through that meal you just had. This is the same for stocks that are overvalued. And you are now in withdrawal phase where you're taking money out. And again, what I'm concerned about is inflation based on supply chain issues, global trade barriers rising. Now, a lot of pundits are saying this inflation is temporary. I am not in that camp. I think we are going more toward nationalism versus globalism, and that these barriers to trade are longer term than people think. So you better get a second opinion on your plan if it's giving you 7 to 10% returns on a balanced portfolio. It's not realistic. Woo, we get back. A lot more stuff to talk about here. Real Investment Show, 700 KCV, Voice of Texas.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Welcome back to the Real Investment Show, Financial Fitness Friday. I'm Danny Ratliff here with Richard Rosso. So always talk about ways to save money and make money, things you can do in different markets. And Rich, I have the thing for you. Today is National Cheeseburger Day, and Finder Media is celebrating National Cheeseburger Day by searching for a professional cheeseburger tester. Look, man, if you can apply
you're a taste
online.
tester?
Wow. Yeah. Bonusfinder.com. Go apply by September 28th, and you could be paid $500 to test cheeseburgers.
Seems
That's
more
a heck of a job.
Seems like more of Brent's job.
What are you saying?
He likes his cheeseburgers, is what I'm saying.
It's always took Brent for a taco guy.
Well, I mean, he used to put that in a taco burger.
You know, I resemble that remark.
But you would say you're more steak and
Tacos.
Beef. It's what's for dinner.
okay, perfect.
Any form.
He's keeping cows in his yard now.
That's right.
The HOA has already written him. He goes, don't worry. They will not. They won't be there long.
Saving a lot on lawn service.
Oh, yeah, yeah. Great fertilizer, too.
Good for you. Good for you. So lots
National
of different ways to
Cheeseburger.
make money. National Cheeseburger Day, Rich. There you go.
That's a creative. Listen, you know what? You do that on Instagram, say some funny stuff. You get 1 billion followers. You make a few $1 million. You get out of here.
Hey, man, that's not a bad deal. If I could find something anybody would want to watch or listen to, it'd be great. I just can't figure that out.
Maybe Danny could do his receding hairline on TikTok.
Man, it would be like a daily occurrence.
It's like,
It'd be
I would do that too, and I
right,
could do
yeah.
that with my how gray my hair gets. We could do a TikTok over
When my son was on TV, somebody came up with a hair account for him on Instagram.
That's terrible.
It was called Adam Clanton's Hair.
Yep, I remember that.
Yeah.
And now he's
Really?
bald.
Yes.
He shaved his head.
Well, he's like me.
Yeah.
Yeah.
I'm not far behind. I mean, it was already, it was amazing at the pace.
Yeah, but you know
my
what?
hair, I can lose my hair on my head
I don't want-
and grow it anywhere else.
all the
I mean,
wrong
I don't want to.
places.
I don't want to make Danny uncomfortable, but he actually has a face to be bald. Like a lot of people
man.
can't carry
Yeah,
that.
that's true.
I
That's
think
true.
he can be
I don't
bald.
know.
I guarantee you, a #1 guard all over, you'll wonder why you didn't do it
When I
sooner.
was at Fox, Mike Iskovitz.
Every time I cut my hair, I think
I'll
about
never forget when I was at Fox and Mike Iskovitz, the weather guy, right?
Yeah,
Mike is
yeah.
a great guy. He goes, "Boy, that Danny's such a handsome man." I'm like, he really is, isn't he?
A little bromance going on there.
Are we going to bring it up on the? Are we going to talk about this on the weather? Or
Mike's my buddy. He's just
no, but he's right. So some people can handle bald.
Yeah.
Some people can't. Brent, you do a good job.
Fortunately,
I will kill
wife likes it.
I will be jumping off a roof because I cannot handle that. There's no way I'm going bald. I'll make everything else happen, but bald is not going to be in my cards. Okay.
Well, you're still holding on pretty good, though.
For my age, I think that's for some reason it's still holding on.
everybody takes stress differently. Mine's just beard gets grayer, hair gets shorter.
Well, the hair on my back gets longer, and I have to.
How often do you have that braided?
So Cheeseburger Day sounds like a good deal, and it's a Friday, so that's.
Cheat day for many people, right?
Yeah, well, yeah, or you can just make your cheeseburger weekend overall. By the way, Danny, we're in very good company because as we were talking about stock returns, I found the article on CNBC from Tony James. He's the executive VP for Blackstone. And he is saying a few things. One, the coming years could be a lost... Now, this is Blackstone, big firm, right? Danny and I, look at us. We're a balding bunch of schlubs. Lost decade for equity returns. Number one, that's the first thing he says. Then he says, companies are going to face plenty of headwinds that put pressure on earnings, higher taxes, higher operating costs, less efficient supply chains, and de-globalization. What he's not saying is, even though it's a stress on corporations, who is going to pay for this? We are. Raise taxes on a corporation, whoop, comes right back to us as the consumer. That's what there's the line. Beeline straight. So keep in mind, when you run goals for your plans, like we do, Danny, we have separate rates of inflation for each goal, especially healthcare, right? Craig here is our senior planner. Does a really good job of looking at, hey, how much, depending on the health of you or you and your spouse and the different ailments you might have, how much more out-of-pocket costs are you going to have for Medicare? Just based on, even if you do all the right things with Medicare and you get your Medigap coverage, you're going to have a certain amount of out-of-pocket cost. And depending on issues that you have with your health, those increase not only the out-of-pocket costs, but the inflation on these costs. So these plans are in constant analysis. And Danny, I don't know how we're going to have to change metrics based on once we get out of sort of the mist of the pandemic of we really start to get a feel for the impact on everything when it comes to COVID. We're just getting studies coming out, just preliminary stuff, and I'm afraid to change anything until we get a little bit more of a trend of inflation. Well, also Social Security came out and said, hey, cost of living adjustment. It looks like anyway for 2021, we need another month's worth of consumer price data. 1.3%. That's actually higher than I thought. The cost of living adjustments for Social Security. And I will tell you, Mary Johnson at the Senior Citizens League, which I follow, if you're an older American or you're going to be retiring and you go sign up for the newsletters at the Senior Citizens League, they send out some great articles about trends in Social Security and Medicare and what's going on the grassroots ground level with people that are going through health issues and so forth. So that 1.3%, keep in mind, if you're taking Medicare premiums, Part B, fastest growing costs in retirement, close to 6%. So if I am an older American and I am getting this great 1.3%, right, Danny? But my Medicare premium is going up 6%. Let's do the math.
Your pay raise isn't what you think.
It is not. So you have to keep this in mind. And we've already talked about how when you look at cost of living adjustments, we're using the CPI-W, which is consumer items that are most purchased by younger people. Gasoline, electronics, less weight to housing and medical costs, which is CPI-E. We don't talk about CPI-E. We don't want that out there because you really should have then at least a 4% cost of living adjustment consistently. And we don't want to pay for that. So, again, Social Security is not designed, it was never designed to be your pension or America's pension. It has become that. So when Danny and I talk about retirement, and yeah, if you saved a lot in variable assets and you're able to take a withdrawal rate, you need to maybe adjust that depending on the environment. But wouldn't it be nice if you don't have a pension to have to look at formulating a guaranteed income stream in addition to Social Security? Now, some people, Danny, don't need it. They've saved enough. Not only that, they manage their expectations. They manage their costs, right? They're not living high on the hog, and they have a comfortable retirement. They've defined it, right? Because you have to define retirement for what you want it to be. And you might have to scale it back based on this pandemic. But there are people that need to look at, here are my needs, my fixed expenses, things I must meet. The best way to marriage these, you meet them up with a guaranteed income stream. In other words, to keep the lights on, pay the rent, pay the mortgage. I can't forego those. Yeah, I can cut the cable. I can do everything else. Wouldn't it be nice if all my guaranteed income covered my needs? Z. Botsky, who's a great mentor of mine, professor, always talks about this, that retirement nirvana is all my needs are covered by an income I cannot outlive. The unfortunate part is the pension part of the stool is busted. It's gone for most, which means you might need to consider what, Danny? You might need to consider.
Don't say it.
The A
word.
You might need to consider annuity structure. Not for everybody. Annuities must be planned, not sold, as we said. Some people don't need them because the whole goal or essence of an annuity is to give you and your spouse an income for life to supplement or bolster Social Security. Those who are good savers have sort of medium life expectancies, it's just sort of normal life expectancies. They don't need it. For those who have longevity in their family, haven't saved enough, it's going to be essential to have an income you can't outlive. And it does not come from stocks or bonds. Think about it from the other way, Danny. People, if Tony James is right, and we're right, about headwind for returns, forget the distribution side. If I'm an accumulator, like you are, and I am, and we're putting money away, what does that mean for us? Because now we have lower returns even for us, right? So we have lower returns, which means we all need to step up our savings rate.
That's right. But it could also be a good thing for an accumulator, right? So after 2008, you're buying things much cheaper. So maybe it's not that long-term event where it's just slow, but maybe it's maybe we do get a bigger dive here,
no,
right?
but maybe you get, but if, say it is more of a time correction,
yeah,
right, and it's stagnant. You put money in, though, but guess what? When you are ready to retire, Danny, you might retire in a tailwind.
That's right.
What a cool place to be, as opposed to retiring in a headwind, which I think people are going to do right now or are in.
Well, that's what we all hope and pray that we end up. But unfortunately, where we retire is luck.
It is. Where you retire in the cycle is luck. Professor Jim Otar out of Canada. One of his best lines. Woo! Hey, you've been listening to The Real Investment Show here on 700 KSCV. Chris Salcedo is next. Hope you all have a good weekend, everybody. Thanks for tuning in. We appreciate you.
Monday, always Sunday, in a rich man's world. While the things happen down.
Get daily investment news you can use, delivered at the speed of the internet. Sign up for the Real Investment Report now at realinvestmentadvice.com.
It's a rich man's world.